We have been talking to so many strategists in the last few weeks. Where are the markets going, right? And you've got people who are saying we're in for another 10, maybe even 20% decline here in the markets. One of them is Doug Ramsey. He's the Chief Investment Officer at Leuthold Wheaton Capital. Let's listen to what he said.
We will cover some hedges just on the basis that you've taken the second most expensive bull market in history and marked it down to average valuations. You know, whether we turn bullish at that point really depends on what market action and sentiment and other economic factors look like at that point. But I actually think it could be a very rapid descent, quite frankly, that could happen over the next few weeks.
So if we see that and we go into a bear market here, Mohamed, do you think the Fed is going to do something?
So for the Fed to do something, two things have to happen. One is we have to have a bear market, and secondly, it has to contaminate the economic fundamentals. So far, the volatility and the price correction has been a financial market event. It hasn't been an economic event. So as long as that stays the case, the Fed will not do anything. But if the Fed senses that there's spillover onto the economy, if people become a lot more risk averse,
right.
If
they
consumers
get scared.
spend less, if somehow companies invest even less, then they will move. But so far, this has been contained to being a financial market event.
But what if we see an earnings recession?
Yeah, that would have a huge impact.
Okay.
If we see an earnings recession, if we see people not spending their oil windfall because they're worried about all the volatility, you know, we're having two things happen. Yes, we're having markets come down, but I think even more importantly is we're getting massive swings on very little data.
And that's a lack of liquidity, right?
That's a lack of liquidity, and it's a change in the volatility regime. We have lost the central banks as our BFFs. They used to be our best friends forever.
Right.
The minute there would be volatility, we would get a statement out of the Federal Reserve calming things. That's no longer happening. So we've lost a stabilizer. Of course, other oil has lost its stabilizer in OPEC. The more stabilizers you lose, the more volatility you get, and the more risk-averse people get.
Do you think we're headed for a recession?
So I put the probability of that in 2017 at 30% a few months ago when we talked, and people reacted quite a bit. I kept, you know, the 70% is we don't. Now most economists are getting to 20–25%. So I would put
for next year.
For next year, I think this year is actually quite hard to get a recession unless you get a major global disturbance.
In what form?
You know, they come under two forms. Either you get a massive policy mistake out of China, or you get a massive market accident, because it turns out that some people had way too much leverage on and they're forced to sell. So far, the probability of that is not dominant. So I don't think you get a high probability of recession next year. I think it goes up to about 30%. Sorry, this year. Next year goes up to about 30%, and then we get closer to the T-junction where major decisions have to be made.
What factors into your 30% probability, though? Where does that come from, Mohamed?
So a few things. The first thing that factors is we haven't promoted growth so far. And the longer you fail to promote growth, the higher the chance of what is now called the secular stagnation, that your system adjusts to lower capacity, lower potential. The second issue is we have financial prices that are decoupled from fundamentals. And if fundamentals don't improve, then it's going to be very hard to retain. And the third issue is divergent central banks. The only thing that's adjusting is the currency markets.
Right.
And I've been around long enough to realize that when currencies move a lot, they tend to break something. And it's very hard to predict what they're breaking. Right now, the biggest risk is the emerging world.
Yes.
Right? So we can't let the currency markets carry all the burden. And if we do, then there's a risk they're going to break something.
So when you say, you know, when I think of breaking, I mean, you know, you could see a rapid devaluation in one of these currencies or several of these currencies. I mean, could we see some of these regimes totally tossed out in the next 12–18 months?
So some of them have. If you're in Russia, you feel like your foreign exchange regime has been tossed out.
Right.
Right. You know, even Mexico, which has been doing well, has seen a significant weakness in the peso. Brazil, the same thing. These are unhinged markets. And at some stage, they can break something. So we already seen it happen. It's not happening a massive thing. I think the main concern is the potential for currency war. That's the main concern, that every country then decides that they're going to try and borrow growth or steal growth from somebody else.
But that is priced into your outlook then?
That is, yeah, that is part of the 30%
Okay.
probability.